Hello, chart watchers, and welcome to this Thursday, February 22nd, Market Watchers Live Show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. We got another, I hate to say it, interesting day in the market. You can take a look at your screen here. You can see that the Dow Jones Industrial Average currently up over 300 points. The S&P 500 up 28, NASDAQ up nearly 60, and the Russell 2000 battling to try and get above its key resistance area around that 1550 area. The 10-year Treasury yield down today, down about 3 basis points, but still above 2.9%. The volatility index, watching this one closely, down almost 10% today after spiking yesterday afternoon after the FOMC minutes were released. Of course, the market sold off, volatility spiked, but it is back down today to 18. I think that's very bullish for the market. Leading today, we've got energy, the XLE, having a really strong day. And of course, the XLE is comprised mainly of ExxonMobil, Chevron, and Schlumberger, three giants in that space, make up about 50% of the XLE. All three of those companies, it's noteworthy, are higher today as well. The XLB materials also having strong day, trying to move back up above some key resistance. We keep failing around 61. That's a level to watch closely here on the XLB. The XLI, industrials continuing to do well today, and the utilities have bounced today as well, although you can see that we had been moving lower here over the past few days. A couple of notable names in energy today reporting earnings. Whiting Petroleum, WLL, you can see a massive move to the upside here after beating expectations. And Chesapeake, which had been mired in a long-term downtrend, also performing extremely well today, up about 20% on its earnings report. And with that, let me bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm doing quite well this morning. A little bit chilly here in Corona for a change.
Well, I thought the market might be a little chilly today after, we saw that sell-off yesterday afternoon. But surprisingly, the bulls are right back at it. It's been a very resilient bunch here over the past couple of weeks off of those lows. So I know we got a lot going on there. But as far as the weather here on the East Coast, I'm in the Carolinas, and it is pretty warm. For February, I was telling you before the show, I think I could turn the air conditioner on today. It's been pretty nice the last few days. So hopefully this continues, and hopefully the market will continue to warm up as well.
Yes, let's hope so. I'm not so sure that's going to happen, but we'll talk about that later.
We have different opinions on that one. I just cannot see, outside of the volatility index being a little bit elevated, up into that range where bear markets can thrive when you got a volatility index in the upper teens up into the 20s and so forth. That's really the only sign that I'm seeing. But yeah, like you said, we got a lot to go over. So I'll let you get through with the announcements and agenda, and we'll get it all started.
Absolutely. So tomorrow, Tom's going to be doing his workshop on island reversals. So that should be interesting. And then next week, we actually have Mark Chaikin coming in. You may be familiar with his indicator, the Chaikin Money Flow. So that'll be excellent to have him in on Wednesday to talk to us about his thoughts on the market. So we'll be looking forward to that next week. But today, we're going to start off with everything StockCharts. Grayson Rose is here from StockCharts, the mothership up in Seattle. So we'll talk to him a bit. And I'll be going over some technical scans and how to create them. 10 and 10 to 1. Our very first symbol is going to be Facebook. I'm not sure anybody's heard of that one. So the symbol is FB if you want to go take a peek at that early. And finally, we'll finish off with some sector rotation information. So with that, I'm going to pass it back to you for that technical news, Tom.
Yeah, it's kind of a good day. There's a little bit of news, and it was bullish. We did have initial jobless claims out this morning, and they came in at 222,000. The market was looking for 230,000, so about 8,000 under expectations. So I thought that was good for the market. And then at 10 a.m. Eastern, January leading indicators came out. They rose 1%, 1.0%. The market was anticipating a 0.6% climb. And you can see here that the continuing trend in the 10-year Treasury yield is to the upside. And, yesterday at 2 o'clock, we had the FOMC minutes come out. The market really got spooked We could pull up, let me pull up an intraday chart for those of you that weren't following the market yesterday that closely. It was a pretty scary afternoon and reminded us a little bit of what we had seen a couple of weeks ago. But I'm going to go into let's do a 10-minute chart. And let's shorten it down to, let's just do like a 3-day. And bring it up on the screen. And here was yesterday afternoon. So as soon as the minutes were released, we initially got a really nice pop to the upside. And it reminded me of a interest rate announcement, a policy statement coming out from the Fed, because we tend to see like a knee-jerk reaction in one direction, and then you kind of go in the other direction. And that's what we saw yesterday when the minutes came out. A quick move to the upside in the first 10, 20 minutes, and then some serious selling into the close yesterday. And at the same time, when the S&P was doing all this, the volatility index shot up in those final 2 hours. We were down. We had actually gone just below 17 yesterday. And I think that 16, 17 area is really critical, at least based on history. That has been a key support level. If you believe this is a bear market, the last 2 bear markets, we never saw the VIX below 16, not once during the entire bear markets. So getting down to that 17 level and dipping into the 16s and then rallying off of it, this is what I was mentioning earlier. This is the one thing that I will hand it to the bears that you've got in your court. Volatility is still high enough where you can see some very quick selling to the downside in the S&P 500, and that's what we saw yesterday afternoon. So that is still in play, no doubt, as far as I'm concerned. We can have these kinds of sell-offs when you've got a VIX at the level that we currently have it at. So that's going to be something to keep in mind and watch throughout. But today, it's been just the opposite. We've got the S&P 500 really climbing since the open. We had the initial push up, pulled back, and by 10 o'clock, when that January leading indicators came out so strong, we have been rallying off of that ever since. The last couple hours, very, very bullish. Now, we did finish weak yesterday. We finished mostly weak on Tuesday. So we're not even to the halfway point today. It'll be interesting to see whether or not we can finish strong today as opposed to the way we have been finishing, leaving these long tails. And when I talk about tails, if we pull up a daily chart, well, let's do it on the S&P 500. But you can see these tails. That just is intraday highs. If you're not a candlestick fan, wherever the high is on these candlesticks for each day, that is your intraday high. And these rectangles, the hollow rectangles or the filled red or black rectangles, they are just marking opens and closes. But these tails, intraday moves to the upside, that's what that marks. So I don't like it when I see all of these intraday moves, but they're not sustained into the close. I don't like to see selling on the low or near the low of the day. And so we keep doing this. We're doing it up in this gap resistance zone. I also had mentioned Fibonacci retracement. A key zone comes in at about 27.42. And today we got up 27.31. We just keep failing at that level. And so that's something to certainly keep in mind as we move forward. I did want to bring up, let's pull up a chart that I prepared today. We touch on this every once in a while. We've been talking a lot about the dollar. And those who invest in some of the ETFs that track some of the foreign markets, you got to be careful because these ETFs do take on an element of dollar risk. And I want to point out what I'm talking about here. So I've got in the top part of this chart, this is the German DAX. So this is exactly what the DAX, the index, is doing. And this goes back 6 months. Now, the next chart here is the EWG. So this is the ETF that tracks the German stocks. But there's a dollar component in the EWG, and I'm going to explain that in a minute. And then down at the bottom here is the dollar versus the euro. So you can see whether or not the dollar is going up or whether it's going down relative to the euro. Now, I highlighted a couple of these periods, and I'm looking at it from the perspective of owning the EWG. So if you're in the EWG because you really like what's going on over in Germany and you want to follow that index, the red area, you can see the German DAX really shoots up pretty well here. It goes up over a couple hundred points, probably about 2%. And yet when you look at the EWG, it barely budged to the upside, barely higher. So it didn't really, and you can see the breakout. Look at the breakout over the prior highs on the DAX. But we don't make the breakout on the EWG. So why is that? Well, anytime you're getting a dollar that is rising relative to the euro, it's going to reduce your performance on the EWG. The EWG, you have to take into account what's going on with the currency. It's not just a trade based on Germany. It's also a trade based on what's going on with the dollar relative to the euro. So this is really important if you're trading these ETFs. It's not just a trade, and you might have owned it before and you wonder, well, why am I getting a breakout on the index, but the EWG isn't following the DAX? Well, that's why. The other example here, you can see with the dollar falling, you actually had a breakout here on the EWG, even though the DAX was going down. So a falling dollar relative to the euro will help your EWG investment, but a rising dollar will hinder it. And you need to know that. And the reason I bring this up is because we just had a really good discussion yesterday about the dollar with Greg Schnell and Arthur when he was on the show on Tuesday. We talked about the dollar as well and the impact that this has in different areas of the market. Well, it has an impact on these ETFs that track foreign markets. You do have to realize that there's a dollar component to the trade. So I just wanted to bring that up. I thought that was really important and kind of fit along the lines of our discussion recently talking about the dollar and how it impacts different things. This is a perfect example. All right, let's take a look at a couple of industry groups. I was looking at the autos. So this is the $DJUSAU. Really nice day today. I think it was the leading industry group within consumer discretionary. But look at all the failures here at the 20-day moving average as we've been moving lower. And we haven't really come off the bottom very far from where we were just a little over a month ago on the autos. So this has been a weak advance, even though we are having a strong day today. I think this is an area where the autos need to make a move, need to make a stand to get through this overhead resistance. Otherwise, they are likely to continue to languish. The apparel retailers. Now you look at this and you had higher prices, lower PPO, negative divergence. We saw the weakness. We broke down below the prior high and this prior high and then the low coming back to test the support area. We broke below that and then moved up. So you might look at this and say, well, you know, it's a little bit of a broken chart. Again, I think with a lot of these charts, you need to make sure you step back and take a look at the bigger picture, look at the weekly chart, because off of this downtrend, back in October, September and October, we broke above the 20-week moving average, and then we really made a big breakout, I think, in November. And on this push to the upside, all the weakness, all that noise that we just looked at on the daily chart, all that does is take us back to the rising 20-week moving average. So I think that this still is in play. I think the uptrend is still in play on the apparel retailers group. Travel and tourism. It wasn't that long ago. Remember, we had that terrible report out of Expedia, and we got the big drop. But now the group's been coming back up. And I want to bring up Priceline. By the way, they have announced that they are changing their name. I don't know why these companies do this. They're trying to mess with us. Google, of course, went with Alphabet. I still can't get used to that one. Priceline is going with Bookings Holdings or Booking Holdings or something like that. And I think it's next week that their ticker symbol will change from PCLN to BKNG, I believe. I'd have to double check that to make sure. But anyhow, just random thought there. But Priceline is looking a lot better here. And I had mentioned this one a couple of times because of its strong seasonal pattern. But also on the weekly chart, there's a strong technical formation here. Off of this uptrend, you can see we had the big moves down, little ABC correction. That's about all I'm going to get into with Elliott Wave. Someone asked me to do the Elliott Wave on Friday. I would give the Elliott Wave a bad name if I tried to give you a workshop on Elliott Wave. I know enough to be dangerous. So, but I think it would be a great subject, though. I think getting a guest on that follows Elliott Wave, I think would be an awesome idea. But anyhow, you do have here a neckline. So you have the left shoulder, left side of the neckline, a head, right side of the neckline. We did not take out this low, so I think this establishes the right shoulder. And now Priceline is making its move back up. The reason I mention this is that Priceline, and I've said this many times before, it's one of the most amazing seasonality charts that I have seen, and I've looked at a bunch of them. But when you look at the last 20 years, check out the outperformance in the first half of the year and the average returns each month, January, February, March, April. So we've got this bullish pattern. If we get a breakout, we've got a lot of seasonal tailwinds that will be helping Priceline as well. Final thought I wanted to share with you. Let's go back here. I was looking at blockchain, Riot, R-I-O-T, and I thought, when I was looking at the chart, I thought this would be a great example of the on-balance volume and the AD, accumulation distribution, and the difference. When I was looking at the chart, I saw a lot of these candles where you're up for the day, but you close way off the highs. And then I saw a lot of these black candles, which mean that you're trading near, a lot of these you're trading near the low of the day, but you're still up for the day. And this can really highlight the difference between the on-balance volume and the accumulation distribution line. So if you've wondered what's the difference, take a look at this. Look at Riot and look at what the OBV is suggesting and then what the AD, accumulation distribution, suggesting. Here we had this huge move up, rallying to new highs on the OBV, and yet the AD was falling apart to the downside. And yet they're supposed to both kind of be looking at these moves to the upside and the force behind them. The difference is that if we finish with an up day, on-balance volume rises. So all of these big, heavy volume days were all showing increases, finishing higher. So therefore, we got rising OBV. But here on the accumulation distribution, it's going down because the way the AD line works is it's looking at whether or not you're finishing in the top half of the candle or not. So if you're, this particular day, both went up, as you can see. But the next day here with very heavy volume, we went up. So therefore, we had a huge move higher in the OBV, but we finished in the lower half of the candle here. And as a result, the AD, accumulation distribution, actually goes in the opposite direction. And that's what was happening throughout the middle of December here with some of these candles. OBV kept going up, accumulation distribution kept going down. Anyway, I thought it was interesting. I wanted to share that. And with that, I'm going to pass it over to Aaron. I know we have a few upgrades and downgrades. What do we got, Aaron?
All right, let's get started. And a lot of people know I do use the OBV, and I think that the AD is probably, I think it's a little bit more accurate in what you're showing there. But you can still see a lot of the, you're still going to get those divergences to look at. So
I was just going to say, I think too that using both of them in tandem, to me, I know Arthur's written about this. He uses, if one corroborates the other, then he feels better about the signal that it's giving. If they're going in opposite directions, it really just comes down to which one you prefer.
Yeah, absolutely. And as I tell a lot of people, I used to calculate it with a calculator and counting paper for my father. That's how I was introduced to it. So I'm just intimately familiar with it and have watched it for so many years that it makes me the most comfortable. So that's also another reason that I use it. But just so people understand, because they're going to see it on my charts, you're right, there is a big difference. And I think looking at both of them can be very helpful. So anyway, our first, we're going to look at two downgrades first. And this would be the first one, Alkermes Incorporated, ALKS. I wanted to point out a few things. So this is downgraded. So I would expect to see prices move further to the downside. And, we had this reverse head and shoulders. It's pretty clear here. And when it executed, it pretty much, it hit its upside target, which would have been right around here. But then that's when it came back down. I'm looking at this area of support. This is a really important area of support, but you've already got that breakdown below the 20. Not good. But with the downgrade and seeing a PMO like this, I wouldn't be too excited about this one. The next one is JELD. And again, I've marked some support and resistance levels. This was a pretty important area of support. I mean, you can see where it lined up quite a few times with tops and with bottoms. So, that's a pretty, we had it close just on that support area yesterday, but it's now trading mostly below that area of support. And with the downgrade, I would expect to certainly see it travel lower. If you're lucky, it'll stop here at that $30 range, but I could even see it going down to that 28 level range, especially when I see a PMO that steep heading to the downside. So it's usually we try and look at downgrades to look for some opportunity, but I'm not seeing that today. All right, I thought this one was good. Now we're looking at some upgrades, and this chart, I like what's going on. First of all, if you look in the thumbnail here, you can see that the bottoms are rising on the OBV, and they're doing that in conjunction with what we're seeing here with a trend. It's kind of hard to tell in there without a solid line, but the fact that we're seeing rising bottoms is always a good thing. And you could even say that this top is slightly above that previous top, and that would give us a positive divergence where you have tops going down and then these tops are moving up. So something to consider. But PMO buy signal, breakout from a falling wedge, which is a bullish pattern, and upside target, I think you could be looking at that 850 range on this one. And with the upgrade, can't hurt it, I would say. KLAC. This one was pretty interesting. Again, I'm really interested. These upgrades are all showing, most of them are showing PMO buy signals. I think all three of them are. And, we've got this support level. It seems to be holding at this point. I'd be a little concerned if it fell below that, but it's holding it nicely. We have the 5, 20, and 50-day EMAs all making crossovers and moving higher. So we have the perfect configuration as far as our EMAs, with the fastest on the top and the slowest on the bottom. So I would be watching this one closely. I think your upside target would be right around here at that 116.50, somewhere in there. And finally, our last upgrade, TSRO. And I thought this one, while it was promising, we're really having difficulty getting above this declining tops trend line and the 20-day EMA. When you look in the thumbnail, we haven't had a close above it. We popped up above it yesterday. We are above it today, but we're trading below it. But I have that PMO buy signal. It is continuing to rise. If we can hold that 20-day EMA as support, there is plenty of upside potential on this one, and possibly with this upgrade, we might see that. So those were the upgrades and downgrades. And with that, I'm going to pass it over to Grayson Rose. He's going to talk to us everything stock charts. And actually, Grayson, I don't know what you're talking about exactly today, but I'm sure it will be interesting as always.
Oh, I hope so. No, we're going to have some fun today. Thanks for having me on here, guys. It's fun to join you. I think it's been about a month since I was last on. So today, what we are going to talk about is charting in style, how I organize my custom chart styles. Tom, what do you think about that? Did you like what I did there? I put that in just for you. I know how you like the jokes.
I love it. I think that you are so witty. You are such a witty guy.
Good. Okay, that's a good start to my talk here. So, anyways, we're going to talk about chart styles today. It's a really, really important feature of StockCharts, especially if you are a member. Before we do that, though, I want to introduce myself first. Now, I have been on here a couple times. I was on here about a month ago. So, for those of you who are regulars, good to see you again. For those of you who are new to the show and you're wondering who I am and who this deep voice is on the other end of the line, my name is Grayson Rose. I am the business manager here at StockCharts.com. But what's fun for me about coming on the show like this and talking to you about things like chart styles, or about a month ago, I was talking to you about my custom chart list organization. What's fun for me about this is that I get to talk to you not as the StockCharts guy necessarily, but also as a StockCharts user, as a trader, as an investor. I am a trader and investor. I have been for quite a few years. I've actually written a couple of books. My most recent book was Trading for Dummies. That came out last year. And the year before that, actually, I published a book with my father called Tensile Trading, the 10 Essential Stages of Stock Market Mastery. So my point here is not to show off or anything like that. My point is that what I'm showing you today, what I'm talking to you about, is actually how I use stock charts as a trader, as an investor, how I use stock charts in my own money management. That's the point that I want to make here. So what are we talking about today? We're talking about chart styles. Now, chart styles, like I mentioned, are arguably the most important aspect of stock charts. Tom, you and I were talking about this a little bit before. I go back and forth. I get this question a lot. What's the most important feature of stock charts? In some ways, it's chart lists. In many other ways, it's scans and alerts. But in a lot of ways, it's chart styles, because that's really the starting place for everything. So
it's a big time saver.
It's a huge time saver. I'm going to run you through that today. I think you're going to get a clear picture of how much time this can save you and how important chart styles are. But for those of you that are saying, hold on, what the heck is a chart style? We're going to cover that in just a minute. After we do that, we're going to talk about your default chart style, which is the most important of all of the important chart styles. We're going to talk about style buttons, which really make it quick and easy to apply your chart styles across different security types, different time frames, things like that. And then I'm going to share with you my tip of the day. Always got to have a tip of the day. So first off, chart styles. What is a chart style? Well, a chart style is a collection of sharp chart settings that sort of become this template for creating new charts. So you've got all these indicators that you can choose from. You've got all these different overlays and different features that you can add to your charts. You can also change the period, the date range, the size, all of these things. Chart styles take those settings that you add below the chart on what we call the workbench, and it saves it. It saves it in your account for later use, so that when you pull up a new stock or a new fund, new ETF, new mutual fund, whatever it is, you can apply a specific chart style to it in one click. You don't have to go setting all of the features of the chart, all the indicators and the overlays manually every single time. So this is a huge time saver. You can create all of these different custom charts that you want to watch, different templates, if you will. You can save those in your account, and you can apply them as you're going through the site, charting different stocks, different indices, different funds, like I said. So all of the settings, period, date range, size, type, colors, overlays, indicators, everything that you can create with a sharp chart gets saved in a chart style, and it's saved in your account. Now, the default chart style is the most important. So when you first go to the site, you come up with a new stock, you're looking at Amazon, you're looking at Apple, whatever it is. When you plug in that ticker symbol to the create a chart bar up at the top of any of our web pages, your default chart style is the one that comes up. Pretty simple. It's the most common chart style that you use. So that's going to come up automatically whenever you chart a new symbol. It's going to be the standard, the default, however you want to call it. It can be modified easily. It can be replaced easily. You can change your default chart style in just a couple of clicks. But the key is that we have a default chart style, the StockCharts default chart style. When you first come to the site, that's what you see. You can change that. If you become a member, you can create your own default chart style. You can totally modify it. Whatever you want to see on your charts, you can add that as your default chart style. So that's really important. I'm going to show you how to do that. Now, we also have something called style buttons. There are basically two ways to manage your chart styles on the workbench, on the Sharp Charts workbench. We're going to run through that in just a minute. But one of the keys is style buttons. We have these little buttons over on the left side of the chart, right to the left of your chart, that allow you to quickly apply your most commonly used chart styles. In just one click, you've got 12 buttons. You can apply different chart styles. You can also expand that menu. There's sort of a hidden menu there. You can expand the menu and actually manage your saved chart styles really, really easily. So that is going to come in handy with our tip of the day. The tip of the day here is something I want you to note. The order of your style buttons can be customized to your liking. You can rearrange those style buttons in any way you want. So if you organize your style buttons with custom chart styles for the different security types and the different time frames that you're watching, you can really, really improve sort of the efficiency of the workbench. When I was on here about a month ago, we were talking about the way that I organize my chart lists. And all that was, it was all about efficiency. Today, we're doing sort of a similar thing. We're talking about style buttons and chart styles, and it's all about efficiency. Tom and Aaron will tell you, any of our commentators will tell you, efficiency, running through the site. The best thing that they've done to set up their accounts is make their use of stock charts more efficient. So we're going to show you how to do that with chart styles and style buttons in just a minute. So let's head on over to stock charts. I'm going to click into full screen here. So I'm on the members dashboard. For those of you who are free users, you don't have an account, you're just joining us for free and using our tools for free. That's great. Thanks for coming. Glad to have you. But what you're seeing here is the dashboard. It's the members dashboard. When you log into your account, this is the first page that you see. So super important page. Want to point that out for everyone. But what we're looking at today is the Sharp Charts workbench. So I'm going to go ahead and pull up a symbol just for fun. We'll do the default, the one that everyone loves, Amazon.
Never heard of it.
Never heard of it. Yeah, it's a small up and coming company. I think they're based out of Seattle or something like that. That is
Small Seattle company.
Just like Facebook, never heard of it.
Yeah, exactly. So anyways, what you're seeing here is my default chart style. You can see these lines on here too. I've got something called the inspector on, which you can turn off. But that's another cool feature. We'll have to save that for another everything stock charts in the future. But this is my default chart style. So anytime I pull up a new symbol, this is what I see. Now, I'm going to have to come on here probably next month and run you through my default chart style because there's some really cool things about it here, but we don't have time to get into it today. So we'll save that for another session. But what you're seeing is my default chart style. That comes up no matter what I chart. If I chart Apple, you're going to see that same chart style comes up. So it's always going to be there. That's my default.
Can you scroll down? Yeah, I was going to have you scroll down.
Yeah, so this is the first way to manage your chart styles. You'll see here we've got this little line here in the workbench called chart styles, and you can select any of the different chart styles that you have saved in your account. Now, the ones that are up here are going to be the ones that you've saved, and the ones down here are going to be the predefined chart styles that we've created for different authors. There's a Tom Bowley style. There's the Aaron Heim style. We've got all of these different save chart styles that you can also use. But your save chart styles that you've created for yourself are going to be right up here, okay? So to save a new chart style as a default, you just click right there, Save as Default. To add something as a new chart style, you click Add New. If you go into a save chart style, maybe we pull up Life Cycle. Let's check that one out. And we want to modify some of the settings. Maybe we change this to a simple moving average. We change it to a 20-day simple moving average. Okay, so now I can hit replace, and I can actually replace any of the chart styles that I have in here. So that's a quick way to manage things. And you can also delete chart styles from here. It's a simple way to delete chart styles. So this is an important line. You can select your different chart styles right from there, right from the drop down. You can also do some sort of light management here. Now, the menu that we really want to talk about here today is the style buttons and the style button menu. So you can see these buttons over here on the side, on the left side, and each one has a name. So as I hover over each button, you get the name. The name pops out. Now, I've carefully organized my style buttons for the way that I track the market and track different stocks and different funds that I watch. So if you click this little arrow here, well, first off, if you click one of the style buttons, let's say equity style. So now I've got Apple. It's my equity style. And if I want to switch to another chart style, maybe I want to watch Apple, a 20-day, 20 days worth of data, 1 minute data, intraday chart here. I can click right into that. So these style buttons allow me to switch between different chart styles really quickly. I even have a mobile chart style set up so that if I'm on my phone, I can click that style button right there and get sort of a better fitting chart right on my phone if I'm sort of charting on the go. So these style buttons are really important. The key here is that if you hit this little arrow, you're going to get this menu that pops out. Now, the menu is going to show you, again, all of our predefined chart styles down here at the bottom. So you can click any of those and chart with those. But it's also going to show you your saved chart styles. So these are all the different saved chart styles that I have in my own account. You're looking at my account. So everything above this little buttons line, those are your style buttons. You get 12 of them. So the 12 most common styles, chart styles that you use in your account can be added up here, okay? So what you can see here is that I've created different chart styles, again, for different security types and different time frames. So I have an equity style, which is my default. I also have a weekly equity style. So if I want to look at things over a little bit longer time frame, I've got a weekly style that I can check out. If I'm looking at an ETF, maybe I'm looking at one of the sector funds, I can pull up the ETF style, which is totally different. If I want to look at a shorter, this is actually going to be, we can pull that up, and let's put in financials. Let's do XLF here. You can see, again, I can click these style buttons, switch it to my ETF style. So now I'm looking at a 1-year chart of an ETF, and I've taken off a couple of those things up at the top. This is a little bit modified version of my equity style. I also have a shorter term ETF style, 4 months. I have a longer term ETF style. That's a weekly chart over a couple of years. I have a mutual fund style, which is totally different. If we do a mutual fund, you can see it's different. I look at mutual funds in a different way. Those are a bit longer term, so I like a longer term chart style over a couple of years. I have different indicators that I look at for a mutual fund. So again, that's one of my style buttons. I have that mobile style, like I mentioned, and I have intraday styles. I have a 2-day intraday style, and I have a 20-day intraday style, which allowed me to see specifically for stocks that I'm watching and stocks that I'm trading. Allows me to find good entry points on sort of an intraday chart, more zoomed in, much narrower time frame there. So anyways, the point here is that I've organized my chart styles, and these are draggable. So if you want to move them down, you want to move the equity style down there, you can drag and drop these wherever you want. You can totally reorganize your style buttons. So for me, what's key here is that every time I come to the workbench, let's say I pull up a new stock. Okay, I got CME here. Every time I come here, I know that I've got this equity style button right there. If I pull up an ETF, I've got this ETF style button 2 down right there. If I pull up a mutual fund, it's right there. It's really, really quick and easy for me to switch between all of these different styles. And depending on what you're watching, again, depending on whether it's an ETF, a stock, a mutual fund, whether you want to watch it over a longer term view or you want to sort of zoom in on intraday data, you can program those in here. You can save those different chart styles and really quickly jump between those different views. So one other quick note here in the Style Button Manager, this little edit button makes it really quick and easy to edit names. So again, you can just delete that, type a new name, equity style that's new. Hit enter, and there we go. I got my new name in there. You can also delete styles right from here, and this little check mark, actually, if you hover over it, it'll tell you, but it's a set as default. So if you want to change one of these to your default, maybe you want to go down here and make this sector ETF style my default. Wouldn't want to do that actually, but you can do that with this little check mark. Hit done, all that pops back. So super, super easy way to manage your chart styles right here in the Style Button Manager. You just click that little arrow and it pops out. And style buttons, again, Tom and I were having this argument right before the show. What's the most important feature on StockCharts? Is it chart lists? Is it scans? Is it alerts? In some ways, I think it is chart styles. I really do. It's a complete game changer when it comes to your efficiency of the site. And it really enhances your use of StockCharts, especially when you organize your chart styles in sort of a way that makes sense to you, like I've done here, as you can see.
Grayson.
So, yeah, Tom, hit me.
First of all, great presentation there. You did it a lot better. I actually talked about chart style and buttons and so forth, not maybe a couple weeks ago, but you did a much better job, I think. I was interested, though, you have a mobile chart style button. Is there certain settings, and this is just a question for me, because I've actually gone into the site on my phone before, and I didn't realize that I'm going to have to set up one of these chart style buttons. What are the settings? Are there particular settings that you want to use for your phone?
Yeah, let's dive into that really quick. It's mostly a size thing. So our charts, you can choose the size that fits you best. We've got huge charts. If you're a member, you can create massive full screen charts up to 2,500 pixels wide. What I've done with my mobile style is I've just chosen a small chart width. So for me, it's 460. You can even go smaller and go 360. That'll fit really well on an iPhone or something. But for me, I've chosen a size of 460. And then I've actually just kind of limited the indicators that I want to watch. I've also made it black so that it's totally different from anything else that I'm looking at. Generally, I do use the sunset chart style. Tom, I know you just switched away from that, but I do use the sunset chart style in some instances. But my mobile style is black so that it's totally different. And I've kind of slimmed down what I'm watching here. So, again, my equity style is pretty huge. I'm going to have to schedule another Everything StockCharts to go over the stuff that's on here. But this is a long chart style with a lot of different indicators that I'm watching. If I'm on my phone, I'm not doing detailed analysis. I just want to kind of get a quick picture of what's going on. So I've got the full quote up here. You can see that right here. So I've got this full quote option clicked on. I have the MACD on this chart. I've got two moving averages, just a 20-day and a 50-day. I do have volume, and I've got on-balance volume as well. So it's kind of a slimmed down version of the stuff that I'm normally watching. But the main thing is size. So you go here to this size menu, you narrow down the size, and you save that chart style away. It makes it a little easier to watch things on a phone. Now our site is responsive. So if you do want to load the workbench on your phone, it's gonna scale down to the screen. You're gonna be able to view everything. But the mobile style, making a smaller chart that's kind of got fewer options on it, fewer indicators, it makes it a little easier. If you are doing a lot of charting on your phone, it makes it a little easier to see things when you've just kind of got more of a slimmed down chart style to watch. So it's a good tool. It's a good trick.
Okay, there was a question in here. I think a couple people were asking, that they don't see the style buttons, but if they haven't set it up yet, you're just going to see that those two little, that little caret and the plus sign, I guess.
Right. If you've got no style buttons in here, you'll notice that I have 1, 2, 3, 4, 5, 6, 7, 8, 9 style buttons.
How many can you have, Grayson?
You can have up to 12. So okay. I've got 9. I don't have the other 3. If I do add 3 more, then those are going to show up. If you have no style buttons set, then yeah, you're gonna only have this little arrow and this little plus. You can always, again, click that arrow and take one of these save chart styles and just drag it up into here. So if I take index view, actually that's a good one to have up there as a style button. Now you'll see that this reloaded, and I've got index view down here as another style button. So it's easy to add those. You can also, if you do select one from down here, for example, I take candle glance and edit properties. You can assign a button in this little menu here. You can change the name and change the button position there, and you'll see you've got 12 slots here. So you can add one to one of your 12 style button slots. Now total, I believe it's 50 chart styles that you can create. It's either 25 or 50. I should know that off the top of my head, but it's a big number of chart styles that you can create. If you're a member, you can really go crazy with all your different chart styles. So the style buttons, you've only got 12 of those, but chart styles total, which you can again see here, you can create tons and tons of chart styles. It's really a big number there. So
yeah, and I just want to point out too, if you have a screen and you're looking at a chart and you say, hey, I want to save this. I really, this is exactly what I want to look at each day when I look at my stocks. All you have to do is click that plus button that's there. If you don't have any right now, just click the plus button. It'll come out and just name it, whatever it is, my favorite style.
Yeah.
And, add it. And as soon as you add it, then it'll be there. Then you'll have your first button. So I think
that's a great point. I mean, look, I just pulled up Aaron Heim's chart style here, but let's say I just kind of stumbled across this. I was creating the settings, and I wanted to add this. There you go, right there.
Of course you do. It's the best.
Great style.
Yeah. So that's how you get started. It's really easy. And this will be such a big time saver if you don't use this.
Yeah, no, it's a huge time saver. When you pair chart styles with chart lists, it's incredible what you can do. It really is. That is the heart and soul of StockCharts. That is the biggest reason to subscribe, is the ability to save things to your account. So you don't have to always go to the workbench and update the indicators and add new overlays and everything every time you come. If you become a member, all of that stuff is stored right in your account. It's there right when you want it. So huge time saver.
Cool. Yeah. All right. Well, thanks for stopping by, Grayson. We certainly, I'm sure there are a bunch of folks here that just got something that they probably didn't know about StockCharts before.
That's the goal.
There you go. Perfect.
Okay. Excellent. Right. Well, I think I'll get into, let's see.
We got technical scans.
Yes. Let's look at a few scans. If I can get the screen to share. It took a little while last time, but I did get it.
Yep. I can say while we're waiting that the Dow Jones right now is up almost 300 points. NASDAQ up 40. NASDAQ's trying to, take out its recent highs. It did get up yesterday afternoon before the minutes came out, got up to about 73.30. So it's still got a little work to do, but NASDAQ's been outperforming on a relative basis. Which
Absolutely. All right. So let's, I'm going to run through this somewhat quickly. I apologize, but I'm going to just talk to you really about creating a scan and looking at the results. And let's go ahead. We're going to just create a new scan. Let's just get right into that. Now, the scanning workbench, I don't believe it's available until you get to, you can get the predefined scans as a basic member, but if you want to make your own scans, you're going to need to become an extra member above. So this is pretty much the default when you add a new scan. It sets you up with a stock and the daily volume average. So you can choose what you want there, but let's obviously narrow it down because this particular one would give us a lot of stocks. So first I'll go ahead and I'm going to, let's see, we'll choose, this will tell me, let's see, the type. There we go, ticker properties. I'm going to go ahead and just add it so that it is US. And then let's look at creating one that about dojis. There's a bunch of different ones. So let's see if we can find any stocks based on just this with dojis. Those can be turning points. Am I right, Tom? I know you look at those quite a bit. So right now, 688. Well, that's certainly not going to work for us. So let's go back and add some more properties. And this is really the best way when you get a giant, if you get a lot of results, it's great to just go in and you can start, you know, adjusting it. So I'm going to add the PMO line and I want it to be greater than 0. So we're going to look at PMOs that are above 0 and let's see how many we get this time. 315. It's getting a little better, but we still need to do a little bit more work here. So let's go ahead and let's add another technical indicator here. Let's do, what do I want to have in here? Let's go to, oh my goodness. See, there are so many choices here. The ulcer index. Wow. I didn't know that was in here too. Okay. Well, let's look at, let's see, OBV. And we will add that in here. And where did it go? There it is. So let's say we want one where the OBV was greater than yesterday's OBV. So this is going to help us again narrow it down. 0. That's a little too narrow, apparently. So we're going to go back and quickly, let's see, let's add another. Let's look at just the S&P 500, maybe, or the 600. Let's see if that helps. All right. Now we're going to go. We'll take this out because that, remember, that took out way too many on our scans. So, all right, 16. Perfect. So before I can even manipulate this or do anything, I have to store it. So I'm going to replace it. I recommend setting up, I call it scan dump. I got this from Greg. I thought it was a great idea. And it's just where you just dump everything from a scan and then you can create a chart list that makes sense from that. So let's go ahead. I'm going to show it to you in Candle Glance because I think that is your best bet. Now, we were just talking about chart styles. If you want to set up your Candle Glance to look a certain way, when you create your chart style, just name it Candle Glance. And that's the style that will come up every time you have a Candle Glance chart. Make this a little bigger for us. All right, so then what I do, as people have seen, I start filtering. And I do that based on what I'm seeing with the PMO, chart patterns, that sort of thing. And remember, this was a doji scan, so I'm kind of looking for reversals here. So first of all, I'm going to look, and I see this really, that's a really nice PMO setup. So, oops, I didn't mean to delete that. Let's go back. Well, let's look at it that way. Okay, summary. We're in summary. Now we're going to go to Candle Glance. Here we go. All right. Well, I think it ended up deleted anyway. So this one has a possible flag, maybe an ascending triangle, which is a bullish pattern. So I'd leave that. Let's say that's a flag. So I'd leave that. We've got one with a big breakout, but that's an awfully big pull on a possible flag. I'm going to pass on that one. That one, the PMO is moving lower. We've got a buy signal there. This one's overbought as far as the PMO. I'm just really going through this quickly. I don't necessarily do it this quickly normally, but we're getting close to that 10 and 10. So, all right, here's one where the PMO is starting to turn over. So I'm not real interested in that. This one, the PMO is flat, but I kind of like this chart pattern. I think it might be interesting, but I'm seeing the possible head and shoulders developing. So I'm going to go ahead and just get rid of that because that is a bearish pattern. This has a nice little breakout, but the PMO is turning down, so I'm going to get rid of that. PMO sell signal, definitely not interested in that. And you could see a double top on that one. This looks interesting, and we have the gap up, and it's now, let's see, it looks like it might have closed that previous gap, so I think that one could be interesting. This one, notice PMO's turned below its signal line, so I would get rid of that. This is a possibility of a PMO buy signal. So I've narrowed it down to, how many do we have here? 6. I'm going to take this one out just because PMO is overbought, just so we can look at this. So now I've gotten it down to the ones I really want to look at. So I can just pull it up as 10 per page, and then you can start looking and analyzing what you're actually seeing. So right here, I can see this was an area of tops. It also was support for this particular rounded top. And now we're seeing breakouts. We have a possible ascending triangle, as I said. You can see the rising bottoms and sort of a flat top here. And that's a bullish pattern. So we could be looking at a breakout, nice PMO buy signal. And we can just continue on down. And this one, like I said, it looks like it wants to come and close this gap, but we need to get above that overhead resistance, like the PMO buy signal, but it's pretty much already moving. We can see that price is already taking off. So that might not be the best candidate. And I can just delete that. And there you go. That's pretty much the best way to set it up. I'm really liking that breakout. And again, dojis tend to be kind of reversal patterns depending on where they show up and looking at the tails and such. I'm not a big candlestick person, so I'm not going to try and get into the details. But what I might recommend to you is if you want to know more about candlesticks or dojis, just go ahead and type that in. And usually your glossary is going to come up first, so that's a good place to go. And away you go. And you can find out more about dojis, and there you It's really great, this chart school tab. There's plenty of things to look up, and a lot of the questions you guys ask in the live chat room, almost all of them can be answered somewhere in chart school, more than likely, or in the help area as far as using the site. So anyway, I think with that, I've shown you as far as technical scanning, I showed you how you can create one on the advanced scanning workbench, how you can store them and retrieve them. And then of course, I think one of the very important things is being able to narrow your scan results down so you can save the good stuff into whatever your chart lists are that you want. So, and with that, I think it's time to move on to the 10 and 10. And I know the first stock we were going to look at, Tom, is going to be Facebook.
Okay. Did you want to do RRG with them or just go?
Yeah, that's true. I will go ahead and do that since I actually have the screen, and it looks like it will be working here. And yes, I pulled up my RRG sector rotation. If you want to learn more about sector rotation, that sort of thing, you can look at that. All right, let's go get the RRG of all of our 10 and 10. Today's 10 and 10. So these were all of the ones you guys requested.
I'm still seeing the other screen.
Oh, I'm
still seeing the.
Yeah, we need our producer to let that go so I can get in here. All right. So here's our summary. If you can see that yet, I don't know.
No, I'm still not seeing it.
Okay. Well, I'm showing a summary pretty much of all of the 10 and 10 requests. I will go through a RRG of that, but I need to have the screen back.
You want me to take it?
Good luck. I have it. It's just I'm not sure what's going on. There we go.
Okay. I've got. Oh, sorry. I thought I took it.
Yeah, you did. You've got it now. So let's just go for it. We're already starting a bit late. So
All right, so here's Facebook. We did recently move down, of course, with the overall market. Problem that Facebook has had, and the overall market, many of the areas of the market, trying to get back through the 20-day moving average. Some areas have been successful, some others have not. And you can see that since we moved back below the 20-day moving average, Facebook has tried 5 times now to get back up above its 20-day moving average and hasn't been able to do it yet. I would be holding off on Facebook at least until it could get back up above that 20-day moving average. This is the first time where the 20-day has moved this far below the 50 in quite some time. We've kind of come back down, and kind of the two have moved together. We saw that at the end of December. We also saw the same thing back in late September, early October. But here you can see we've actually gotten a pretty significant death cross with that 20 going below the 50. So I'd like to see Facebook strengthen and get back through those moving averages before I'd consider it.
all right. Next one is going to be DO, Diamond Offshore Drilling.
All right, DO. Well, some of the energy stocks I think are finally showing a little bit of strength, but this one's been going straight down. And like Facebook, it hasn't had all those tests of the 20, but I do think like Facebook, it's going to struggle to get back through. So I think for this one, again, if I was just annotating, trying to remind me of something, it would probably just be noting this 20-day moving average. We're way below it. We are starting to show a little bit of strength, but I think we're going to have some resistance when we get up to that 20-day moving average. So that's what I watch for.
All right. Let's see. Next one is LITE, Lumentum Holdings.
I'm sorry, what was that ticker symbol?
Sure. LITE.
Okay.
Light.
Yeah, I'm going to go out to a weekly chart here. I messed up all my buttons there. I was actually messing around with mine a little bit while Grayson was talking. I think I may have just reordered them or something by accident. Yeah, I think what we've got here maybe is the right side of an inverse head and shoulder. We got a beautiful uptrend in play. And so I think that something I'd be watching for here would be maybe a test of this 62.5 area, because you got the top. This could be a left shoulder. This is your left side of your, that'd be the left side of your neckline. And then we came down here, put in a lower low, which could be the head. Look at the volume coming in on this move back to the right side. I think that everything's setting up here pretty bullishly. I wouldn't be surprised if we fail around 62.5, 63. Maybe one more trip down to test that rising 20-week moving average. That could be the right shoulder, inverse right shoulder, and then a breakout down the road with increasing volume. Would actually measure on this one up probably to about 82.5, maybe $83. So I think LIT looks good, but we are looking at a weekly chart. It'll take time for this all to develop, but I like what I see here. I'd be bullish late.
Okay, let's see. The next one is Snapchat.
Yeah, I got to tell you, I actually bought this one today.
Ah.
Yeah, I was watching it earlier, and I'm going to go to a daily chart here. Let's do it this way. Well, it could be a really quick trade if it doesn't hold. I love it when it gets to the top of gap support. So I had an order in earlier when I saw it was weak, and I had my order in at the 20-day. I didn't wait for it to get all the way down to gap support, but you can see with the auto support resistance line right here, that to me is a big level, because when it gapped up on this kind of volume, a lot of times you'll see stocks pull back because when everybody wants to buy, you got market makers on the other side shorting, and that's why you see a lot of gaps fill. In this case, there was so much volume and so much demand for the stock that the open was actually a buy point. We saw very little selling from the open that day. We just continued moving higher. So this is one actually I've been waiting for a while. It is in my strong earnings chart list, and we got this one pull all the way back down to this level. So I just think, again, from this point, the reward to risk is on my side. It's not that it's guaranteed to be a winner, but I do think that Snap down at the 17.25, 17.5 area does make sense. I like it.
All right. Next one is going to be, let's see, MC Moelis and Company.
All right, MC. Just a normal pullback. I like the volume coming in on the breakout, so that's all good. I think that any pullback down to test price support and that 20-day moving average, I'm going to say price support is right at about that level. Here's where this was the prior high. We pulled back, we broke out through it. And again, like I said, volume was very heavy on this push. And then a normal pullback to test the rising 20-day would coincide with the price support area. I think as long as MC stays above $50, I would be okay with it. I like it in the short term too. This pullback I like as it gets closer to 50 and a half, 50 and a half to, well, maybe it's 50 and a quarter. I don't know. Just trying to figure it out, looking at this sidebar. But I think if it closed much below 50, I'd be careful with it.
Okay. Next one is going to be Chipotle. Making me hungry just thinking of Chipotle, CMG.
Yeah, I know. I'm sitting here starving, actually. And as soon as you said that, that was the first thing I thought about was a burrito for some reason.
Exactly.
The stock's definitely gotten a little bit of a lift here in the last 5 or 6 days. I think that was earnings related. I think that Chipotle just reported last week. I'd have to double check to make sure, but I think that was the case. The problem I have with Chipotle is not the daily chart. It's the weekly chart. And the weekly chart has just continually been going down, down, down. Have we finally reached a bottom? I don't know, but I think looking at this weekly chart, the chart would become much more interesting to me and much more buyable. There was the breakdown from a closing perspective. That's your intraday low. You can see that as we made the last move up, we got very close to hitting that resistance area. I think this stock's got to negotiate 350 to 370 before I'm going to be really interested. Now, I know it's at 313, it's got ways to go, but this was a stock that just 2 or 3 years ago was $750. And so if I have to wait a little bit to get it through a key resistance level, that's what I'd do. So for me, CMG is a hold for now, or really just kind of an avoid watch. I want to see things really start to turn more on from a price perspective, take out that resistance area.
All right. Let's see. Next one, Dana Incorporated, which is DAN. And they wanted to look at the weekly chart.
Well, we have
that impressive.
Yeah, I think, we have a negative divergence on the weekly chart. So I think we're going to get a 50-week test. And that's what I would be looking for. This is in the auto parts area. But here's what I was just talking about. See how you got the lower PPO? And then right here, you got higher prices. And volume on this push to the upside was just average at best. I don't see any huge volume bars. I think it just ran out of momentum. I mean, we had a huge run. It's entitled to take a little bit more of a pause. I think we'll sideways consolidate in some kind of a continuation pattern. Maybe we'll rebound and start to put in the left side of a neckline and one more low down to hit the 50. Maybe we'll just go straight down and come back up and have a cup. I don't know. But I do think we're going to get a 50-week test. And the breakout that we saw also is just below that 50. So I would say somewhere around $25 to $26 is what I would look for on Dana to the downside. And I actually would be a buyer at that point. I think it's going to hold and start to turn back to the upside. I like the space.
All right. I think, let's see, biotechnology. We're going to look at Illumina, ILMN.
Yeah, ILMN, well, I still like the biotechs in general. I'm sticking with the weekly chart here because you can see history over the past 14, 15 months. Once we broke above this 20-week moving average, we've had a little bit of movement below the 20, but for the most part, we continue to trade above. We did close just below 2 weeks ago, and we came right back up above it again. So for me, I think just the recent low, as long as it holds 210, I would be continuing to hold Illumina. I think it's in a good space. I think the chart looks good. And so for me, it's going to be these lows that came in, maybe draw it right to that last low. So I would watch that to the downside. But my expectation is that we're going to head back up and test these highs near 250.
All right. Let's look at Verizon, VZ. I don't like it. The person said that, it's got a 7 PE and, a yield of over 4%, 4.6. But I don't care for it.
Yeah, I mean, this is probably one that if I would only be in maybe for the dividend, if I was a dividend player. I think it's got a decent dividend. I'd have to look at what it is. But I agree with you. I mean, it made a breakout. The PPO looked really good here on this weekly chart, and it failed to hold it. It didn't hold the breakout. It didn't hold the rising 20-week moving average. And if you go back and you look over the last year and a half, it's gone nowhere in a market that's been going straight up. So relative strength certainly isn't going to be very good, and it's not acting well technically. So again, from a income perspective, it may be a nice dividend type player as a more conservative part of your portfolio, but I don't see the strength. I'm a momentum trader, so this is not the kind of stock that I would be interested in.
All right, and our final one is going to be Freeport McMoran FCX. I think this is interesting. I find this one interesting.
Yeah, and I believe this one is really tied to copper prices. I think if you look back at where copper prices have gone and you compare it to this chart, actually, I'll tell you just for the fun of it, last one. Let me pull up correlation. And I'm going to use it versus copper. All right, and let's take a look at this and just see. Yeah, I mean, you see the tight positive correlation. Copper's been in an uptrend, and copper is certainly helping FCX to the upside. We could go back even further. Let's go all the way back to basically the start of the bull market. But you're going to see mostly a very, very strong positive correlation between the price of FCX stock and the price of copper. So that's going to be one thing you're going to want to keep an eye on. Now, technically, to annotate this, I think that the key price support here, you can see the double bottom. We bounced, then we broke down. Look at the volume pickup on this breakdown. We came back up. We tested it, couldn't get through. But off of this uptrend, I think we had a little bit of maybe an ascending triangle type of a pattern that we broke out of. Went back and look at price support and the rising 20-week moving average coming in together. That is holding. I think FCX on the longer term picture at this point looks really good. I would be watching that 20-week moving average at 17.25, and maybe right around $17. Maybe consider that as a stop. Otherwise, I'd let this one go. I think it continues to move higher with copper prices.
Okay, and that concludes our 10 and 10. So as you can see, the symbols that are being presented. And I will have these up in our Market Watchers Live chart list, which you can find in the Market Watchers Live blog. If you just go to the main blog page for Market Watchers Live, you'll find the link to get to our 10 and 10 annotations on these charts Tom just did. And with that, I'm going to move over to, I want to remind everybody about ChartCon. I know everybody's going to be getting tired of hearing about it, but it's a really great opportunity for all of you to, see more than just Tom and I. So let's see if I can get my screen to share. It's just one of those days,
Yep, it's coming up in August. And by the way, if you do come out to ChartCon, I can tell you that the weather in Seattle, if you don't know, the weather in Seattle in August is perfect.
Yes.
July, August, they get almost no rain. So even though throughout the year they're known for being, a pretty rainy area, that area of the country gets almost no precipitation during the month of August. So it's a great location. The restaurants out there are awesome. If you've never been to Seattle, it's a great city. Anyhow, just wanted to kind of throw that up there for you.
Yep. I'm still having trouble sharing, so I will keep going here. But thanks for talking about that. If I can get the screen to share, I will do our market update next. But for whatever reason, it is really locking me out of this today. Yeah, I don't know. We try, we do run through this, everyone, before the show to make sure. Here we go. All right, let's do that. Also, if you're interested, come join us. I mean, the conference itself, ChartCon, is online. It's very similar to what you're watching right now. So I expect every one of you to be in attendance for ChartCon online as our regular viewers. So, but if you want to join us, that would be fabulous. I would love to meet some of you and talk Talk Shop. All right, so let's go take a look at our candle glance and see what has been going on in the market so far today. All righty, there we go. You know, we had a really nice rally this morning, Tom, but it looks like we're getting some pullback at this point. And, you know, I would be a little concerned. I know my short-term indicators are showing that we should see a pullback at this point. I don't think this is enough of a pullback. We should probably see more. But at this point, you know, it's just a bit of a pullback after a nice rally this morning. We can see the NASDAQ has pulled back quite a ways. We're actually looking at it coming close to yesterday's close. TSX is up. It made some new intraday highs today, but it has pulled back off of those. The Treasury yields, 10-year Treasury yields are down slightly. UUP gapped down and has been trading kind of choppy here, but mainly holding in the negative territory there. Commodities are up. Look at that nice flag on USO. So we're seeing some good movement there on USO, currently reading 1263. GLD, we have, here we go. We've gapped up on the open and we are in a nice rising trend on GLD. I'm still rather bearish on gold, though, in a little bit longer term than what we're seeing here. And of course, the VIX has pulled back. We're now seeing readings at 1887. And let's go to our member homepage, look quickly at the market summary. There we go. Let's get down to the spiders, what's going on here. And you can see all of our sector spiders right now are in positive territory. There are no laggards, but interesting, we're seeing energy utilities near the top. Financial and consumer discretionary, a little bit more aggressive areas of the market are the lowest. But as I said, everything is up at this point. As far as the U.S. industries, oil services, natural gas, really doing well, up, both of them up over 3% today. And as far as our laggards go, banks, broker-dealers, insurance, and telecoms are at the bottom of our list. As far as international ETFs, Russia and Mexico are leading the way with moves above 2%. And the laggard is Taiwan's ETF. It is the only one of the international ETFs that we cover that is in the negative. And with that, I'm going to conclude the market update. And I want to go right into the RRG so that I'd give it back to you, Tom, for technical to make a comment, but I'm afraid I won't get it back.
No, you're fine. You're fine. Go ahead.
Yes, if you don't mind, let me do that. All righty. So I actually, I wanted to tell you again, sector rotation analysis, just look up sector rotation and you can get to this, and it's great. It talks about the business cycle, which areas are aggressive and more defensive. But I wanted to look at my RRG chart, and I'm pulling it up as a daily version so we can get a little bit shorter time frame. I've included all of the spiders, but I also added GLD and commodities just to see where they're sitting in terms of the SPY. So the benchmark is the SPX. And when you see those outliers, that means they're performing relatively, in terms of the S&P, they're relatively strong because they're further away from the center. So even though gold is starting to make this move toward weakening, it still technically is in the leading category and pretty far away from the S&P. So that gives you an idea. The one thing I just wanted to point out, we were talking about energy. Energy is starting to move out of that lagging area. Thought it was interesting to see utilities in the leading category. That's a sector that I would expect to be doing well in a decline. And with that recent decline, it kind of makes sense that we ended up way up here in the leading category. But just wanted to give you a feel for what we're looking at as far as strength and weakness. So with that, I'm going to pass it to you, Tom. And I know you were going to look at a few sectors in particular, if I recall.
Yeah, I'm just going to look at the price relative, which is what I like to do, just to, when I talk about whether or not a market move to the upside is sustainable or not, one of the things I like to look at is what's leading the market, what's lagging. And so it's a little bit like the RRG, except it's price relative. So you're seeing it on the charts, on a sharp chart, as opposed to looking at the RRG. I think the RRGs are awesome because they're very visual, and show you, as you go through certain periods, exactly how they're moving in the various quadrants relative to a benchmark. Here I am using the S&P 500 on top. So you're just looking at the S&P moving to the upside. And so what I like to do is follow whether or not I believe that this movement to the upside is sustainable. And if it's sustainable, the thing that sustains bull markets more than anything else is appetite for risk. You really have to have traders, investors willing to take on risk. When you see that the risk is, being reduced and folks are, moving more into non-aggressive areas, and the aggressive sectors that I look at are the technology, industrial, that's the XLK, the XLI, consumer discretionary or cyclicals, the XLY, and then finally financials, the XLF. These are the four aggressive groups. And what I always like to see is when the S&P 500 is going up, I like to see the overall trend going up in these as well. Now, it doesn't mean that you're going to see, I don't try to use this day to day. In other words, you can see here for a period of time, the XLI underperformed the S&P 500. And I could show you why. If you go back into that October, November time frame, the XLI on its own absolute chart had just gone a little bit too far too fast. We had negative divergences. And so I was expecting to see some underperformance. So that's not the kind of stuff that bothers me. We still overall have this pattern of higher highs and higher lows. And that's what I'm interested in. You can see we still have it with the technology group. Technology is trying to make a breakout as we speak, even though the S&P 500 is weakened. And, Aaron, you talked about this a couple minutes ago. When the market pulls back, you expect certain areas not to perform well. And some of the areas that I expect not to perform well are the aggressive areas. I don't mind when this relative chart moves lower when the market is weakening. But what we're really seeing is that here with the technology, we're still outperforming the S&P 500. We're almost ready to make another breakout to another fresh relative high. I think that's bullish. When I look at the industrials, we just recently in January made a push to another relative high. So industrials were leading that advance in January. Now we've gotten a pullback, and again, you're going to get that sometimes, especially when the market weakens. But you can even see that at the very end, it's starting to turn back up again. You've got consumer discretionary. Went through a long period of sideways consolidation, maybe even a little bit of lagging performance for a period of time. And that group finally broke out. Now, if you looked at a chart on the XLY, and I think this is really important, if we pulled up the XLY, and I'll come back to this chart in just a second. Let's pull up the XLY, and let's look at it on that weekly chart for the last few years. And during the period when it was underperforming, I'm going to go back 5 years on this chart. But during those couple of years when it was underperforming, we never broke down. And even in 2016, we got a breakout. We pulled back. We started making this move to the upside. So the group had not broken down. It just simply wasn't going up as fast as the S&P 500. So the breakout occurred back in the middle of 2016. And certainly from the time the election in 2016 hit, when markets started moving to the upside and breaking out, you can see that the XLY also made this nice breakout. And then in 2017, we had like a triple top where we consolidated throughout the summer and then finally made a breakout right after or toward the end of the summer. So if I pull this chart back up and we go back and look at, where did I just see if I still got it here. Here we go. So if I look back at the XLY here, we made that breakout. I was just showing you, we made a breakout, a significant price breakout in late summer, which would have been August, September. So it would have been right in here in this time frame. So we were just starting to make a breakout on the absolute chart here, but we hadn't yet gained relative strength in consumer discretionary. Well, that has changed. And over the last 4 or 5 months, this has been the best part of the market. And I think this speaks to that, this relative line moving off of these lows, taking out the highs from the past 2 years. This is a group that, in my opinion, we want to make sure that we are at least, at least have equal weight with consumer discretionary. I personally would overweight the group. I think this is, when you got a group that's outperforming the S&P 500 like this, I would be continually looking for areas within this sector that are starting to show signs of strength as well. I pointed out the media agencies, that's one area, but there are a number of other areas. Even I think the gambling group, which has been weak of late, I still think that's a group that has, more upside in it going down the road. So there's a number of areas. Of course, broadline retailers have been just huge to the upside outside of Walmart's report the other day. But you can see that the aggressive areas of the market are continuing to do well. And if we go back and looked at the same chart in 2007, 2008, when the bear market was starting, these relative strength lines didn't look anything like this. I can tell you for sure, consumer discretionary and financials were both in the tank to the downside. So I think you have to be, you have to be willing to look at what's going on under the surface of the market, not just, okay, the market's pulled back or it's moving higher, but what's the character of that movement to the upside or downside? What's leading, what's lagging, and so forth. When we look at the three defensive groups, XLP, consumer staples, XLV, healthcare, and XLU, utilities, look at the relative strength here. And I think it's pretty clear money is not moving into defense. That's what would worry me. If the market started going higher and we had money moving into defense, that would bother me. But we're not seeing that at all. In fact, utilities just made a multi-year relative low. Consumer staples on its price relative to the S&P 500 just made a new multi-year low. And even though healthcare is holding up, it too is well off its high from a couple of years ago, 2-3 years ago. So I think that the way everything is lined up here still supports a bull market. And that's why I'm not coming off of my view that we are in a correction and not the start of a bear market. I could be wrong. I mean, the market can do whatever it wants, and every bear market is different. So it certainly could, be the start of a bear market. I just don't think it is. I don't think that if we were truly getting ready to go a lot lower, that money would not be rotating towards safety. I just don't believe it. And money's coming out of the bond market as well. That's another defensive area. Normally, you would see money moving into the bond market. It's coming out of the bond market. We're seeing yields going higher. So I'm just,
I agree with you. I think when we're looking at whether we're going into a bear market, versus the bull market, I'm not sold that we're talking about a new bear market. But I do think in the shorter term, we will go back down and test those previous lows. Until I see my short-term indicators not so overbought and heading straight down. when they decide to start bottoming, then I'll feel a little bit better. But yeah, I'm with you. Looking at that sector rotation, we aren't seeing that rotation into those defensive areas of the market. We just really aren't. And even gold, I think gold is starting to be worn, has been wearing down after hitting, its highs. And I suspect it's still going to fall. And that is also when you could consider that sort of a defensive area of the market. People tend to go in there when they're really concerned. And we didn't really see that.
Mm-hmm. Well, and the rest of this story here hasn't been written. I mean, when we topped back in 2007, we didn't just top in October. I mean, we had movements where, we had a surge earlier in the year. We fell back. I think we went to a high in July of 2007. We pulled back. And then we made that final push in October. And throughout the entire year, money was starting to rotate different areas. This could be just the first top. And we might have another top that comes. I know that Greg yesterday on the show was saying, he thought maybe we'd move to a new high in March or April. And if we do that, what's the character of that move? I mean, that part of the story hasn't been written yet. Do we move up and do we start seeing some of these aggressive areas roll over on a relative basis and money come out of that? Mm-hmm. And do we see defensive groups start to lead that push to the upside? Those are some of the things that I think still have to be seen as we go forward. So I can only look at what indicators I have right now. I can't
Yes.
tell you how the market's going to evolve over the next several months and what's going to lead, but the market will tell us that. So it'll be an evolving story for sure.
Absolutely.
There was one question. I don't know if we have time for you to address this one today, but there was a question I saw come in recently. And I know Greg yesterday mentioned how his, I think it was the MACD, came down and almost hit the trigger line and then turned back up. And I know you refer to that as a bull kiss. And if heading down and it starts to turn up, it doesn't get through the signal line and turns back down, that's a bear kiss.
Yep.
There was one question that came in. I thought it was a good question. Maybe, take some time, and this could maybe even be a subject of a workshop one week.
Absolutely.
The question was when the PMO starts to turn up. Sometimes you say, well, it's starting to turn up, and you give kind of a bullish, view that you're thinking, okay, maybe it's starting this turn to the upside, but then it gets up and it doesn't get through, and it starts to roll over, and you get that bear kiss. How do you differentiate? Like if you were looking maybe to get into a stock, do you just maintain that awareness that it still has to get through that trigger line?
Absolutely. My preference, and you've seen it over time with my scans, I don't wait for I don't wait to see if there's going to be that crossover. And in fact, I'll just show it really quickly. Promise.
Yeah, I saw the question. I thought it was a great question. I knew you'd appreciate it. So
yeah, absolutely. So I like to look for, stocks that have been rising at least 3 days on the PMO, but I also don't want it to actually have given me that buy signal. I'm waiting on that buy signal. I want to see when the power shift is going on. And so I'll just run the scan real quickly and see what we get. 93. So this is a ton, but
maybe you can just pull one up though and just take a look and see.
Yeah, let's just look at Align Technology. It's got a nice high scooter. All right, this is actually a really good example because you get crossover buy signals and sell signals, but you don't get a lot of twitch. You don't get a lot of flat, over and above. So this one I really like when I see these bottoms, especially right above the zero line. I mean, that tells me there's a lot of internal strength going on here. So, but what do you do when it gets up there and then it starts to turn back down? Let's see if I have a good example. I don't know. We'll just figure out. Okay, there's a spot right in there. So honestly, I don't think I would have gotten in on this one anyway because it's a little bit on the overbought side. But, you get that uptrend, you're looking at that move coming up, you're getting the scoop, and you get in. Let's just say you get in. Well, of course, at that point, then I start watching the PMO. And while I don't use it as a trigger to sell, it is that extra information. And if I start seeing it turning down below my signal line, that tells me, okay, this isn't worth the risk. It's just not worth the risk. So that's kind of how I look at those bull and bear kisses. You can see one back here where we got the top, it started coming back down, and it didn't actually give us, I don't think it gave us the sell signal. And then it just started right back up again. I like those. You don't want to see this because that's telling you it's probably going to go down. But I like to see that it's tried to suck some people into selling, and that's what's brought that momentum down. And then all of a sudden, hey, this might not be so bad. We brought it down to a level we want to buy it at, and you get that move up. So
okay,
I hope that was helpful.
Yeah, very helpful. I think that, that it was a fair question, and it does, sometimes you get that cross, sometimes it just kind of rolls back over. So I thought it was a good one to go over.
Yep.
Okay.
All righty. Well, as far as our schedule coming up, I can't believe it's time to wrap it up. But Tom's got his workshop tomorrow. It's going to be on island reversals. So you'll want to come and check that one out. And then I'm very excited to say next Wednesday, or this coming Wednesday, Mark Chaikin will be here, the creator of the Chaikin Money Flow Indicator. I'm sure he'll have a lot of interesting information. And, he's on CNBC a lot, and he's actually decided that it was okay to come on our show. So I thought that was pretty nice. Anyway, I'm going to pass it back to you. It's been a great show, guys. I'm going to sign out here.
Absolutely. And as you can see on the screen, we'd love for you to take the How'd We Do survey located on the lower right part of your screen. Just gives us some feedback on what you think of the show. Of course, you can suggest some topics for future workshops as you've been doing this week. I do want to thank everybody. I got a ton of ideas going forward, and picked one of them. Had a couple questions come in about islands and island reversals and island clusters. So I'm going to take a look at those tomorrow. And I think too, with the market gyrating and being so volatile, I think it's a timely topic because being able to spot these reversals can be very critical. So I want to thank everybody for stopping by today. Do complete that survey as you exit if you don't mind. We do really appreciate your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. We'll see you back here on Friday. Take care. Happy trading.